Next, we get into the income tax section. So you'll notice this is a pretty large section. And that's because Golden Years is very detailed when it comes to the tax calculation. So it's going to do a full detailed tax calculation every year. So if we take a look at their current year situation, this is kind of like that current year cash flow where we're going to see the income and adjustments and itemized deductions in detail line by line. See everything that makes up their income sources, any adjustments, itemized deductions, standard deductions, personal exemptions, taxable income, and then their total taxes due broken down into federal, payroll, other, and state income taxes. We can see a graphical view of their total taxes over time in blue compared to their spendable income, how that changes for them in the projection. We can also see a tax versus expense graph, so you can see what portion of their total expenses goes to taxes. Next, we get into the tax summary, and this is going to show them total taxes year by year. This is the amount that the program will have included in the client's expenses. So we can see a breakdown of how that total tax number is generated by looking at this report, whether it's federal, AMT, state taxes, payroll taxes, and we can see again more information if we use the audit trail. So if we wanted to get a breakdown of the federal income tax, we would go to report D8, which is in this same section, federal income tax worksheet. So you can see the marginal tax breaks that are used for the calculation. One thing I do want to point out here, filing status, where it says joint all the way down, that's good. If a death occurs, it will change to single. If you ever see this joint for the first year and then single after, that means you probably do not have the check if married box checked. So if we click on the client's information, it's just this little checkbox here, check if married. Make sure you have that checked. Otherwise, you would see it change from joint to single after the first year of the projection. The other thing I'll point out here is the marginal tax brackets. These can be indexed, so this is the current 2014 marginal tax brackets. Typically, planners will want this increasing at a rate similar to inflation, assuming that the breakpoints and exemptions will go up over time with inflation. So in this case, I don't have that set, but if we do want to set it, we go back to the input under tax data, and then you'll notice on this filing status and options tab, you'll notice index rate for federal tax tables and exemptions. So that's 0, but typically you want to put a rate close to inflation in there. Okay, I skipped a couple of pages, so I'm going to go right back up here. So we were looking at tax summary. Let's go down to the next report, which is taxable income analysis. This is going to show you their gross income, AGI, and then their taxable ordinary income each year, and any net dividend capital gain type income. So again, you can get all the details you need to by following up any of these columns using that audit trail reference to get a breakdown. The program has all the rules built in for things like exemptions and itemized deductions, so it will have all those calculations that you need to come up with an accurate tax analysis. So you can see everything that makes up their interest, dividends, and capital gains. That federal income tax worksheet we were on just a moment ago. Any adjustments to income for things like qualified plan contributions that they're making, if they're paying self-employment taxes, alimony, self-employment medical insurance premiums, itemized deductions and exemptions, as well as phase-outs. So the program does have the phase-out rules as well. It does do a full AMT calculation every year, so the program is going to factor in AMT if the client does indeed have an AMT situation and that's a tax that they need to pay. If early distribution penalties were coming into play, those would be factored in. You can see a breakdown of the FICO worksheet, so wages, self-employment, hospice insurance. This will include that 3.8% on the net investment type income as well, which was new for 2013. We can see how much of their Social Security is taxable every year, so the program is going to run through that calculation. And then we can come up with the state taxes. So the program is going to pick the state taxes based on what you have entered in your program settings. So you can see where you select the state for tax purposes. You do need to enter in the state tax information, including the breakpoints for the state where your client resides, under Tools and Settings and Defaults. So if we look here at state taxes, Oregon, all this information has been set up so the program, when it goes to calculate the state taxes, will look here to provide the breakpoint information. So you do need to set this up to have your state taxes included. More information about their taxable earned income, and that's it for the tax section.